Hi, this is Dave with Market Trading Concepts. It's Saturday, March the 3rd, closing out the week for Friday, March the 2nd. I'm going to start out with the indexes here. The indexes have been pretty uneventful all week. They've just been in this kind of choppy range between the highs that, for example, that the Dow put in at around 13,000 and support at the 21 EMA and between 12,800. So at this point in time, 12,800 is still fairly strong support. Unless we break that level, we have a lot of tails showing, that these levels are being bought. But it's just, the price action's getting tighter and tighter, and it's either going to break up through this level or break down. So it's hard to tell exactly which way the indexes are going. If we take a look at the Dow futures from the DARV squeeze perspective, you can see on the weekly chart the 12,800 level is holding. On the weekly basis, we have a doji on the week. So there's a little bit of indecision going on there, which would explain, why we're in that consolidation zone between support and resistance. On the daily chart, you have a new DARVIS box that's formed here, and it highlights that consolidation zone that I just mentioned. And we had a short signal, a false signal fire against the trend. So that's good that it actually held that and didn't follow through with that signal. So that failed signal itself is a positive sign. We have a long signal that fired somewhere in, it fired back here with this squeeze, and it actually almost hit its target. So now we're in a situation where in another squeeze, in a quiet period, so we should have some volatility return to the market. We have all the signs are still fairly bullish, although we are losing momentum. And this MACD here on the daily is rolled to the low side. So that's a bit of a warning sign. So I think the safe trade here would be to wait for it to break up above this level here, or break below this level here, break below support, to kind of figure out where it's going to go. Otherwise, I think it's in no man's land at this point in time. The indexes have come a long way. If you see on the weekly chart, this kind of angle on the moving averages is pretty high. It's pretty extended. It wouldn't be uncommon to see a deeper pullback, but at this point in time, it's just kind of wait and see mode. Taking a look at the ES, it looks a little bit stronger than the Dow. It looks a little bit stronger than the Dow. It looks a little bit less consolidative, if that's even a word. It looks like it's been consolidating a little bit less and kind of grinding higher as opposed to the Dow. The weekly chart looks about the same in terms of, it's fighting resistance around this level here, 1368-ish. So, we closed around 1368.75 on the week, and, we've got a bit of resistance overhead. So it'll be interesting to see where we go from here, if we get a deeper pullback or if we kind of chew through these resistance levels, which I think are pretty significant on all the different time frames. We'll take a look also at the NASDAQ as well, just to see if there's any divergences. And the NASDAQ looks a little bit stronger, probably because of the crazy new highs action in Apple all the time. The NASDAQ looks really, really strong. A few weeks ago in one of our videos, we did mention that, trading the indexes from a swing basis, that the Dow had already kind of moved and confirmed, and that the NASDAQ had, more room for upside. So I think that that's kind of played out nicely. But where we're at this point in time, we haven't tested the 21 period EMA in a long time. And I think at some point we're going to need to do that. It's a potential buying opportunity if that happens. And if I catch it intraday, I'll be looking to take a short-term swing position on that situation. So the instrument of choice on the situation of a pullback to the 21 period EMA on the daily chart would probably be using, you know, the Qs, the QQQ ETFs, and using a Delta 70. This is my preferred way to trade it. A Delta 70 call option, you know, that expires probably 1 to 2 months out, and just looking for, you know, anywhere from 10 to probably 25% return on the option, and using probably a 1-to-1 risk to reward ratio. So I'd probably risk 25% on the option, looking for at least 25% upside. I'm going to take a quick look at the notes and bonds this week. I haven't actually looked at them in a while because they've been a little bit boring. I mean, you have, you're still bullish on the weekly. You know, you've got blue Hakanashis here. You have a long squeeze that fired off several weeks ago, but as you can see, you know, there's a bit of a divergence here where we're making, you know, higher lows, higher highs, and the squeeze momentum has been going to the downside, and the trend momentum has been going to the downside. You also have, you know, the MACD crossing lower, but it's still above its zero line. So you've got some, you know, you've got a consolidation range in this DARVIS box here. You had a long signal fire here. It hasn't quite hit that target. To me, the bonds look pretty toppy, and this is a hard call to make because any kind of government intervention, you know, can cause the bonds to go higher. You never really know what's going to happen, what kind of crazy news events are going to drive this market, at least in the short term. But from a technical perspective on the weekly chart, this looks a little bit toppy. You have a, I'm just going to draw a quick and dirty trend line in here from these lows. So if you look at that, you have, you know, this situation where this, I think that this angle, which is probably a little bit more than 45 degrees, is kind of unsustainable for the long term. So I think at some point, like, you've broken this trend line and now you're just going sideways. So it's hard to really tell where you're going to go from here. I think you really need to see it break out of this range to confirm its direction. And I think that, you know, this range between about, on the 5-year, I'm sorry, we're looking at the 10-year, between 129 and 132. I think from a swing basis, you need to see a break of that either way. Otherwise, we're just in no man's land. We close with a doji on the week, and I'm just going to zoom in there. We close with a doji on the week, and that is, you know, we're kind of in indecision mode on at least on the Dow index and on the bonds as well. I think we're kind of gearing up for a bigger move here, and it will be interesting to see which way that move is going to push the markets. Jumping back now, jumping back to the 5-year, you have a similar situation where it's just really going sideways. You know, there's a lot of sideways action here. You have bullish indications with the divergences that we mentioned for the 10-year. From the daily perspective, so that's on the weekly chart, but from the daily perspective, now you have more signs of kind of divergences. You had a sort of short signal fire here with the break of this DARVIS box. You have the 8-period crossing below the 21-period EMA on the daily chart, and you're just kind of you know, probing. You closed above the 21-period moving average on the daily, but you have, you know, some bearish signals. You've got red Hakanashis. You have the MACD crossing lower, and it's now crossing below the zero line. And you have some, you know, this is still positive on the trend, but it's, you know, in the lower bands. So I think if you saw a break of this level, while it's in a squeeze and you get a DARVIS squeeze short signal fire, I think that would be the first heads up that the notes and the bonds are potentially, you know, topping out and ready to move lower. That said, you still have some pretty strong support on the weekly chart, so taking a swing position would not be the safest thing to do, but it would be kind of a heads up to future direction. What you'd really want to see is this rolling over and coming back up and maybe testing it and looking to enter on a retest after it has signaled short and get more bearish indications underway instead of fighting your longer term trends. So you'd want to see a little bit more red here. You'd want to see a squeeze fire to the downside. You'd want to see more bearish action in order to get short the bonds. They're just in a massive weekly uptrend. So there's no point in fighting that at this point in time. If they do move lower, there will be lots of opportunity to get into that move. And just looking at the 30-year to round things off, you have a DARV situation where it's in the middle of its range. That's totally no man's land. You have really sloppy action on the daily chart, but you have some bearish indications coming in. You've got a lot of mixed signals, really. It's not just bearish. You've got red, blue. You've got mixed situation coming in here. Your all of your 5-year dailies in a squeeze potential breakout situation. The 10-year daily, same situation, squeeze potential breakout, and the on the 30-year, the 60-minute, the daily, and or rather the daily and the weekly are in a squeeze potential breakout situation from the DARV's perspective. So I think you're really you're just waiting to see where it's going to go and waiting for it to confirm the move before taking a position. If we get a huge move in bonds, that will most likely signal a huge move that the market is ready to make. So I don't look a lot at stocks these days, but I'm just taking a quick look at Google. Google is still in an uptrend on its weekly chart. You do have some bearish bear signals here, but you have a squeeze that just fired off. Unless the momentum turns higher, that's kind of a short squeeze, but you still have some bullish indications with moving lower though. So that's not looking great, but on the daily chart, aside from this resistance that you have to fight around 630, the 630 level, just above 630, you have a potential for a move back up to 630, 635 on the daily chart. You've kind of put in an uptrend, a higher low here, and you're pushing off with the DARV squeeze, long here on the daily chart. So this is kind of interesting. It's something that I would, if I was still trading Google, I'd probably look to at least fill this gap and then reassess from there, take profits and reassess from there. But the weekly chart's not looking great, unless you get a little bit more bullish action on it. But it is holding support at the 21 EMA, which is good, and above the 80 EMA on the weekly, and it looks like it's pushing higher. It closed close to the top of its range on the weekly, which is a positive sign. You've got a lot of doji action going on here, but I think it's possible to get maybe a pullback and a push up, or just a push up right to that level. So I think the safe trade here would obviously be the pullback, but stop below the 21 EMA on the daily would make a lot of sense from a risk reward perspective. You're probably looking at a risk reward of 1-to-1 there, which isn't great, but it's not that bad either. Taking a look at the US dollar. The US dollar's been a little bit tricky here because we had this well-defined support area in here with this trend line that lines up with the 21 EMA. We had a solid close below it, and now we've had a solid close back up. So you haven't had a lot of confirmation on that. You've only had one bar close below it. You don't have another confirmation bar. You don't yet have a test to this level. So this is a tricky spot to be in. I would probably just leave it alone at this point in time. You had a situation here where you broke this DARV box, and then you hit some major support and just jumped up. So this is a tricky spot to be in. I'll talk about some of the other currencies now, but this is kind of driving, the move in gold, which we'll get into, which had just a crazy move. And this would be in a situation where I wouldn't touch it. I wouldn't want to be short the US dollar at this point in time because we had a close above the 21 EMA on the daily chart. and we're still above it on the weekly chart, and we're still bullish, at least on the weekly somewhat, although it's very mixed. So this is a tough place to be in from a trading perspective, and it's kind of a leave it alone situation. So speaking of tough situations to be in, I'm still long the Australian dollar, and it's taking, I'm using options. I'm using I'm long the FXA, which tracks the Australian dollar. It's an ETF that tracks the Australian dollar, and I'm using Delta 70 options, call options. So I'm long the FXA, which tracks the Aussie dollar, and at one point I was up when it probed above this resistance level here on the weekly. At this point I was up about 34% in my option. So the tough thing is that I'm looking for at least 50% in my option, but now I'm all the way back down to scratch. My position is actually, it's almost 1% down. I was up 34% in the position. It's really kind of aggravating from a trading, as a trader, because it's like, you've got good profits on the board. You're expecting a much higher move. For example, I'm expecting a move at least somewhere in this area here, which would allow me to take profits, but it's just been trying to chew through this major resistance level. And I didn't think the resistance was that strong until, 1, 2, 3, 4 or so weeks trying to chew through it. Now on the daily chart, as I mentioned the other week, there was a potential to almost get shaken out of this trade, but it didn't close below the 21 period moving average on the daily chart, held on to the position. We had some signs of weakness. I think I got into the position on this day. So I've been in the position since this day. We've had a lot of choppy action, and then when we got to this position, it looked good to go. We had a failed signal here, which is a good counter kind of signal that I mentioned sometimes against the trend. So this signal with the trend in and around this area here, when this fired the other day, and it probed above that Darvis box, giving firing a Darvis squeeze. So, but we're still chewing away at that level. We really need to get a clean break above this level in order to take profits on the position. And to be honest with you, if I get one good day where it even comes up to here and I'm able to take 30% on my option, at this point in time, they expire next month in a few weeks, or this month rather, at options expiration, I would probably just close the position. It's just taking way too long to work out. So I'm in the zone now where I'm just managing that position, looking for that one day where it's going to hopefully, all indications, I'm not hoping and wishing, but all indications are that it is going to go higher. So when we get 1 or 2 days that it does do that, I'll probably close a position and just take a smaller profit if I need to, because it's this is a situation where it's just taking way too long to work out. So looking at the British pound, this has kind of been the theme with currencies, and I think it has something to do with the indecision in the US dollar, and the indecision in certain markets. But we talked about how we broke this downtrend line, and we came back down, tested it, and you can see these tails here, these signs of accumulation on the weekly chart, and we're still holding above this 21 period moving average on the weekly. And you can see that, we had a downtrend, and now this is just in, we're just starting to turn mode. This is really early stage. If we find support and push higher, the best thing to do would be maybe to look at the daily chart, where on the daily chart we have this lower low put in, this kind of double bottom. We had an initial probe and a long signal on the daily, and then now we're getting a pullback, to the 21 EMA on the daily chart. This is a potential swing buy area, but it's very early stage. You'd want to see more kind of trending action and buying this pullback when we get a more advanced, a more mature trend in place. This would be a really early stage entry. All indications are it wants to go higher, but you've got a lot of overhead baggage, in the form of Darvis highs, in the form of price resistance areas. So it's really early stage, and you have to be really careful on how you want to approach it. But I think overall, I think it is going to grind higher, and we may test, $1.60, $1.61, $1.62 area, within the next month or so. Hard to say, but I think it's in the cards. Canadian dollar, same situation. We had we talked about this potential weekly DARV squeeze firing off on the Canadian dollar, and it did do that this week. And, it gave a long signal right at par. So that's interesting. It gave a long signal right around par. And it looks like it wants to grind higher. You do have quite a bit of resistance in there as well, right around this level. So I think it's going to grind a little bit higher, but it's hard to say because the US dollar shows signs of strength. It's at support. It hasn't really broken down yet. You're getting a lot of kind of mixed signals, but I think some of the other currencies are going to grind a little bit higher, and we're going to see a little bit of weakness in the US dollar. Anything can change that at any time. So this is really cautious early stage stuff. I realized that a little bit more this week with the action in the Australian dollar. This is all, it's all early stage stuff, and I think it would make more sense to give it more time to develop before taking an actual position, because we're just kind of at critical junctures here. You've already almost hit targets here on the Canadian dollar, so buying this breakout and maybe taking a quick target would have made some sense, or waiting until a more mature kind of trend develops and then buying a pullback, not necessarily at a better price point, but at a safer price point when you have a more established trend in place. So I think that's probably what I'll be looking to do. I want to see it chew through those resistance areas. If these trades do work out, you've got a lot of potential for upside, so you don't have to be the early like they say in technology, the early adopter. You pay the most for the technology that comes out. I think you can be a later stage kind of market participant, for lack of a better word, a later stage entry into the market at a safer level. So just taking a quick look at the euro then, the inverse of the US dollar, and I probably should have done that right after we looked at the US dollar, would have made more sense, but it is Saturday, and the brain is not necessarily 100% in work mode. So the euro tested trendline support here, and it kind of pulled back from there on the weekly chart, right back down to the 8 EMA. It closed below the 21 EMA in the weekly. I don't really like to see that. There is a possibility, we're still negative here on the trend, but the MACD is rolling higher, below the zero line. So you got a lot of, mixed action here. You've got blue Hakanashis, you've got, this is bullish, this is bearish, but it's losing momentum. This is a little bit mixed and bullish, although we could put in like a higher low and push higher. But from the weekly perspective, this is really still in a downtrend. This is really still in a downtrend on the weekly chart. On the daily chart, you have a situation where you really have, I'm going to draw more of a proper trend line in here just to show it. So you have more, from these lows, depending on if you want to grab them from here or grab them from here, but you have, kind of that action going on there with a sort of uptrend here where you broke across the 21 period moving average on the daily. You had an 821 cross, and you put in a higher low. You put in a higher low here. You had an initial long signal last week, and I said, you've got a confirmation that the euro wants to go higher, and it did go a little bit higher, and now it's pulling back to this trend line, back to the 21 EMA on the daily. But it actually closed below the 21 EMA. Now it only did that for one day. So if we had multiple closes below the 21 EMA and below the this trend line, decisive solid closes, I would say that maybe the euro is headed for a lot more downside. But it's kind of in no man's land, where you've got euro at resistance, US dollar at support, and it's just, you just got to wait for more confirmation signals to see which way it's going to go. I don't think at this point in time it's not tradable until you get more indications of follow through either way. Either the euro holding and breaking higher, the US dollar coming down. It's just really in line in the sand mode right now. So I'm just having a look at the Japanese yen, and all I can say is, wow, it's really taking a whooping. That's a technical term, by the way. It's taking a whooping, and this is really, like, these are some pretty major moves here. I'm not really sure what's going on, except for the yen is being used in the carry trade type situation. Although, you can only follow the signals here and say, the Japanese yen is coming down. This seems to be like this whole zone, not a specific level, but a zone seems to be a pretty strong area of price congestion support going back over time. But the daily chart looks really negative. I'd be concerned if I were short the Japanese yen at this point in time, although everything is really, in your favor, and even the weekly chart is rolled over. Everything is really in your favor. What I would be concerned with is, so you've got, I'm going to give check marks here to the bearish side. You've got all indications bearish here if you're short, and even this is kicked in and locked in this week, and you've got all indications bearish. Break of this level, bearish, bearish, bearish. But what I would be concerned with is a rapid snapback to this level. So if I was short right now, I probably would have covered somewhere in this range, and I'd be waiting for the next snapback rally, at least to the 21 period EMA on the daily chart, to initiate a fresh short. Because you're going to take a lot of heat if it comes all the way back up here, and when something is that overdone. That often happens where the shorts just get blown out, and and then you get a fresh opportunity to initiate a short position, and vice versa if you're on the long side. So I'm I'm having the same problem with the silver future. So I'm looking at the SLV, which is the silver ETF. That tracks, the futures. So we had a similar situation, although it held up a little bit nicer by the looks of it. It even held the 21 period EMA. So it's kind of like the better looking sister in terms of the the two instruments. So silver, the better looking sister, is it's holding up nicer. It's still blue here. This still looks decent. This is still blue. It's still early stage. You can see this 20 and 21 period EMA, 8 EMA are just in the process of turning. But it looks a lot stronger than gold does in terms of the, it had a big move down, but it's holding these levels a lot cleaner than gold is. So one of the things that I think of when I see these moves happen, one of the things I think of is, okay, are some big players getting on board here to position themselves, and is this just a flush move with a potential for the big guys getting on board and riding it higher, and then you distributing it again at much higher levels, or is this the beginning of a move down? So it's too early to tell at this point, but something to keep our eye on. Looking at crude oil now, crude oil actually looks really good. It found resistance at this 110 level, where it formed the top of this DARV box locked in, but then we had a pullback, a nice pullback to the close to the 21 EMA on the daily chart, and a bounce. So it'll be interesting to see if we can break above the 110 level. I think then if we can get above 110, then I think we're going to test around 115. That's just my opinion, of course. But that I think is quite possible. It still looks fairly strong on the weekly chart. You've got a pretty decent structure still in place. But anything can happen. You can get pullbacks, even down to $100 a barrel, but you know, the structure, the chart structure, the indicator structure still looks like it's intact. It still looks good to move higher across the board. So I'm looking at that saying, you know, this is interesting. I don't think it's tradable at this point in time unless you bought this pullback, and you might either have to wait for the next pullback or wait for this situation to take place where you've got, let me just zoom out here, this situation here, and I'm just drawing this here where you get a situation where it does one of these, and if it's going to go, let's say, to 115, where this could be a potential buy area if it breaks above this this swing high here. So it's kind of like a breakout above the swing high. I don't like to buy breakouts, but it, you know, you see this pattern all the time. You know, when the market puts in a swing high, it breaks above it and it goes towards its next swing, potential swing high. So I think that that's a situation that this is the safer entry, obviously, this pullback. But this is a potential area to look at as well. I don't know if I'll be trading it, but I'll definitely be watching it. And then last but certainly not least, I'm going to have a look at the grains. I'm having some kind of goofy action happening here with my data feed, but I'm able to chart some of this stuff here. We have the corn, starting off with the corn, it looks like it's trying to push higher, you know. You're getting some early stage structure in place that's, you know, it's very early stage. You know, this higher low that we've mentioned, you don't have a higher high yet. But I think I'm looking at this and looking for signs that it really wants to make a move higher, push out of this consolidation range. It's showing signs of that on the daily chart still. You know, you've got a long signal here, long signal with a pullback to the 21 EMA on the daily. So I've mentioned that before. That's kind of how I use this work. I look for, you know, the higher low. I look for the breakout momentum, DARV squeeze play, and then I look at the reversion to the mean, you know, the pullback. The pullback's always the safer entry level, but I use the breakout momentum to tell me that it's ready to bust a move, basically. So, you know, bust a move and then pull back to the safe entry level. I use that a lot. I sometimes, as you can see with my gold trade that I explained, with momentum type markets, sometimes I just jump in, but you know, the risk is you take a lot more heat, and that does sometimes happen. You either miss the move or you take heat. So it's just really a risk management perspective. But I like using breakout momentum in conjunction with reversion to the mean, because the breakout momentum confirms the move or the potential move, and then the pullback is always the safer entry. So those two combined come together for a fairly nice systematic approach to trading, in my opinion, and from my experience. So from the daily perspective on corn, bullish, you know, opportunity for movement with the squeeze. This is bullish, and that's bullish. So this is not yet bullish, but it could potentially turn higher. This is bullish, bullish, bullish. So I think corn's going to move higher, I guess, in a nutshell. And taking a look at soybeans, as we mentioned, see, like you can see that soybeans, and this was a really good move here, and we mentioned it in the last one or two videos, how soybeans seem to be leading this move in grains higher. We noticed initially the DBC was making a move, and then we noticed that it looked like soybeans was leading the move in grains, and you had this kind of signal here without the squeeze, so it was just a DARVIS breakout, and you have this action here where soybeans closed at the top of their weekly range, which is really strong, and then we had this situation here, which we highlighted in one of our last videos, where you had a long breakout, pullback, bang, off to the races, and it hit this target at 1320. So 1320 in soybeans, that target was met. That was a really nice move. I personally didn't trade it. I don't swing trade the grains because of the inherent risk in being, you know, caught on the wrong side of it in a lock limit move. But this was something that I was looking at the DBC and waiting for a pullback, and I wasn't watching it closely enough again. But, you know, I noticed the move taking place. I pegged the direction Didn't get in the move, but it was a nice move, and it was an early stage. We had an early stage heads up that this was moving higher, and I think that soybeans really, they really confirmed that things were going to move the way that we thought they were, and they were the leader of this move, in my opinion. So taking a look at wheat is kind of, it's very early stage. You still have, you have mixed bullish and bearish indications, which is pretty typical of a market that's in transition or ready to turn mode. So, but on the daily chart, I think you have a higher low put in place here, and you've got more bullish indications coming into place on wheat, but you did have an initial long signal here on the weekly chart. So this is interesting. It's very early stage, but you do have, I think, a higher low put in place here. It looks a little bit sloppy, but you've got potentially a higher low put in place with a DARV squeeze. That's a really sloppy trend line, but a DARV squeeze reversal taking place here. So I think that we could see, a push higher. Obviously, you'd want to see more of a trending structure in place to buy a pullback. You want to see some air in between, your bars and your 21 EMA, a nice pullback, safer entry point, and then looking for a push higher. So I think this looks really good. As I mentioned before, I think there's a lot of risk swing trading the grains, at least from my perspective. For my account size, I wouldn't do it. I know there are traders out there that do it, and they're cool with that, and they make money, but they understand their risk, and that's the point there. They understand their risk. And lastly, what I'd like to do is have a look at the DBC. So the DBC was kind of our heads up. We were looking at it. It did provide, and of course I missed it again. I need to get my swing trading alert system in place here. But it did provide, we had this DARV squeeze reversal that we talked about from the other week, the other videos, and it did give a long signal. And then this would have been the safe entry right here. This is exactly what we would have been looking for if we were, a little bit more on the ball. It's not the lowest entry, but it is the safest entry, because what you can do here when you get a decent trend in place, you look for this pullback here, and you can see the accumulation with this tail, with the bar closing, at least 50% off of the highs, or I'm sorry, off of the lows. So you've got this accumulation taking place. The pullback, looking at a lower time frame chart, maybe to time the entry better. But what you can do in this situation here is you've got some nice air here. You've got some good trending action. You get the pullback. You buy it somewhere in here. Let me just make this a little bit cleaner. You buy it somewhere in here, depending on exactly where you get it, by kind of drilling down to a lower time frame and timing it. And then what happens is you can place a stop below the 21 period moving average. So this is a really decent support level. You place a stop below it. The problem is if, let's say, for example, if you were to buy it here, you're going to take a lot of heat here. So it's really a risk management issue. You don't always buy it lower at a lower price, but you buy it at the safer entry price. And I think that's really important in terms of trading and risk management. That's something that I've learned over the years, that the safer entry is usually the better entry, because it's safer in terms of the fact that you can define your risk, and if it's going to continue the trend, then it will hold, those key levels typically. And if it doesn't, if it probes below and just dings you out, that's fine. Your stop management plan can actually call for, you want to see actual solid closes below that level. So that's another way, not to just get dinged out on a flush, which is something that I looked at with gold, not just getting dinged out on a flush. So it's really a risk management tactic that you can look at. It really comes into play in these situations where, you're looking for, looking to take a little bit more risk, but for potentially, higher rewards and bigger moves. So that's something that I'm looking at. I'm going to watch this trend develop. It's still pretty early stage. You've got a little bit of indecision on this weekly candle, a bit of a doji forming, but you've still got all bullish indications here on this weekly chart and on the daily as well. They're all bullish. So that concludes the weekly video for this week. I hope it helps. If you have any questions, feel free to email me. You can contact me through the Meetup site. I'll just throw up the link there. Okay, so if you go to this link here, meetup.com/Burlington-investment idea meetup. This is our Meetup group. We meet on the last Sunday of each month. I've been doing these videos to specifically share ideas with the group. I wanted to announce to the group that we're going to be having a really interesting event coming up. I'll be sending out the details early next week, and I'll also be sending out a thank you note for the last meetup. We had a good group of at least 10 people here at the last meetup. We had some good discussions, but one of the things that I realized in talking to some of the members, and there were a couple of members that stayed with me after the meeting and provided me with some good feedback, and you guys know who you are, and I really appreciated that. And one of the things, some of the feedback that I received is both in the services that I offer here at my trading floor in Burlington, and just in the general level of where people are at in their trading and investing journey, is that we really need to focus a little bit more on technical analysis, education. So providing some insights into technical analysis. So we have members that, let's say, have some technical analysis experience, but they've been experiencing a little bit of information overload. They don't know how to put it all together into a systematic approach to trading. And then we have some members that they really don't know what much about what technical analysis is. They're struggling with, okay, that sounds great, but what's a moving average? What's an exponential moving average? What's a DARV box? What's Bollinger Band? They don't have enough exposure into technical analysis. So we have these kind of what I'll call two levels that we kind of need to bridge the gap. And I think we can add value to the group by providing some of that education or helping to facilitate some of that education. So with that in mind, I've been speaking with one of our members. One of the members, I've also joined his group. So if you come over to Investors and Active Traders, these are our members. So, and you come over to Jim. Okay, so here's Jim. Jim is the director and treasurer of the Oakville chapter of the CSTA. So they're in the next city over. So Jim and I have been talking and trying to work together to help our respective members, because both of our groups have very similar focuses. Our focus is on learning, education, and basically the betterment and the development of the trader and the investor. So we've been having discussions. He spent some time in my trading room floor this past week, and what we're trying to do is co-organize an event. We're going to do it in Oakville at the Sheridan College at his next meeting, and it's going to focus on somebody that has really helped me in my trading journey. He has agreed to do a meeting with us via webinar. He is a consistently profitable, successful trader and investor, and he basically has really helped me to hone my putting it all together kind of technical analysis skills into a workable system. Now, I follow some of his work, but I also have my own work, and his overall systematic approach has helped me to incorporate some of his things and make it my own, but also to help me take my own trading aspects and perspectives and techniques and methods and really tighten them up into a more workable overall strategy and overall systematic approach. So we'll be sending out we're really excited about this event. It's going to be awesome. And it's going to take place on March the 21st. It's going to be a CSTA event that has been kind of co-organized, co-sponsored by our Meetup group, and by me specifically, working with Jim, and working with, this, probably what I would describe as the closest, one of the closest things, or one of the closest people that I've had to a personal mentor in my trading and investing journey. So I thought it would be of value to all of our members, both of the Oakville chapter of the CSTA and the CSTA at large. I'm really, I'd want to thank Jim and the CSTA for helping us to kind of bring this together, but I think it'll be really of value and helpful to our members of the Meetup group, Jim's members of the CSTA and the CSTA at large, and I think it'll be a great experience for people to get some exposure to, how does a consistently profitable trader view and approach the markets? What are the kind of things they look for, they set up for? We'll be announcing this early next week. We'll give you guys plenty of time to register. I think the first meeting of the CSTA meetings are free, and then after that they require registration. So you can contact Jim directly through our site. There's, when you're part of our site, you can go right to Jim as a user, and you can send him an email through the site. Through an email link. So I encourage all our members to do that, to be part of the event. The event will be broadcast live in person at the, now our speaker will be presented via webinar, but we'll be in a classroom setting at the Sheridan College just off of Trafalgar and Oakville, but it'll also be available in webinar format. So we'll send out the details for that. It's going to be a great event. We hope you all can make it. And keep in mind that we did organize this for you guys in order to help you either get started or help you to put it all together if you have, some knowledge and experience. So I hope you do, I hope you're able to make it. I hope you don't miss it. And if you have any questions, contact me, let me know. Look forward to seeing you there.